Okay, and so put those in the cash flow button and you get the answer is B, minus 88,203. So in this case, it would not be worth doing it. It costs too much for the money you're getting in the future. Okay, let's see, I'm going the wrong way here on my slides, forgive me. So, okay, so here's another example. You consider an investment in rental property. You're going to have to spend $365,000 today to buy the property. But you think that after all expenses, taxes, and everything, you can make $50,000 per year from renting the property out, right? And then you're going to do this for 8 years. At the end of 8 years, you want to retire, and so you're going to sell the property. Your best guess is, based on whatever estimates you use, you've seen how much prices go up in that market over the years and that kind of thing. But for whatever, you make an estimate that you can sell it for $550,000 8 years from now. And so this is your best guess of the cash flows you'll get from this project. If the discount rate's 9%, what's the net present value in this project? So again, take a moment, try to figure this out on your own. You're going to get 8 payments of $50,000. In the last year, you'll also get $550,000. And so if the discount rate's 9%, what's the NPV of this project? So I encourage you to stop the recording, try and get the right answer here. Let's talk about how you do that. If I'm using the cash flow button here, obviously cash flow 0 is minus $365,000. Now, you're going to get 8 cash flows of $50,000, but remember in the 8th year, you also get $550,000. So using the cash flow button, I would say that I get 7 of $50,000, and then in the 8th year, I get $600,000 because I get the last $50,000 plus I sell it for $550,000. So I'm going to put cash flow 1 is $50,000 and then FO1 is 7. And then cash flow 2 is $600,000. Right? And at 9%, you should get one of those answers there. Let's just talk about how you would do this one. Let me open my spreadsheet here and I'll show you where we do that. So I have cash flow 0 here is minus $365,000. I'm going to get $50,000 a year. And then FO1 is going to be 7. I'm going to get 7 of those. And then cash flow 2 is going to be, the way I think about it is it's the last $50,000 plus what did I say I could sell for? $550,000 at the end. So $600,000 at the end. So that's what I would put in my register. There's another way to do it, and the way I have to do it here on Excel is I can think about all my cash flows. There's the first one, and then I get $50,000 a year every year. And then in year 8, I get $50,000 plus my sale price of $550,000, and I get these cash flows. Right? And the required rate of return here is 9%. So at 9%, put those in the cash flow button. At 9%, you should get an answer of $187,767. So the answer here is D, $187,767. So take a moment, be sure you can do that in the cash flow register. Be sure you can figure that one out, and we'll pick up here on the next recording.